Okay, we'll get started. You know, in the earlier days of organizing the OffshoreAlert conference, I used to make the mistake of scheduling sessions to start at like 8:45, 9 a.m. on the second morning. And then I realized that the sort of crowd we attract, the sort of wealthy, successful, affluent crowd, you know what? They go out on the first night, they have a good time, they get in late, and the last thing they want to do is get up early on Tuesday morning. So thanks for getting up reasonably early. So, the point of this session is to just give some tips on how to detect investment fraud. I've been doing this a long time. I've been sued many times, and, there's nothing like experience to give you sort of confidence in what you're saying. And we've exposed a lot of frauds. We've been challenged. I've been on, I've been a defendant in a libel trial, and a couple of the libel actions were criminal. And you're experiencing some unusual experiences that most people don't experience, and it gives you a sort of quite a rare insight into detecting fraud. And it's got to the stage where, it's pretty easy for me to detect fraud. I can typically spot a fraud in seconds. But then there's a time-consuming process of, properly investigating it for the purpose of writing a story. But in terms of actually recognizing whether something is a fraud, it takes seconds. But the research and the writing is what takes, a couple of weeks or a couple of months. So I want to start off with what I think is, so on the panel, so I'm going to present first, then David Marchant, who's an ex-hedge fund. Were you a manager, David? Yeah. He's an ex-hedge fund manager turned investigator. So poacher turned gamekeeper, and he currently, he's the founder of Intel Suisse in Switzerland, and we have Daniel Alberts to my immediate right. He's an American living in Kenya, and he's actually a fraud victim, and he will speak about how the circumstances under which he came to be a victim, the sales techniques that were used to snare him, and the response of hopefully sort of regulators and anyone else you asked to help you after you realized you'd been swindled. So anyway, I'm going to start off with Ponzi schemes. If you could show the slide. So if you click. So, this is Fairfield Century was an offshore feeder fund into Bernard Madoff, and Bernard Madoff was literally doing nothing, right? He literally, even now it is astonishing that he was just taking money. He couldn't even be bothered to do any trading for years. And sort of so-called sophisticated fund managers who, I think Fairfield Century, I think it was in Bermuda where I used to live, and it's a very expensive place to live. These guys, no doubt, were renting, the 10,000 a month houses on the ocean, swanning around Bermuda, thinking they were sort of, hot stuff. And they were the biggest idiots in Bermuda because they were giving their clients money, billions of dollars, to somebody who was doing nothing with it. So this is their purported performance chart. And as you can see, it is, it's just a straight line, a diagonal line, trending upwards with little or no variation over many months or years. Anytime you see a performance chart like this, it's a Ponzi scheme. And the definition of a Ponzi scheme, according to the SEC, is basically redemptions are met not out of any underlying profits, but from new money coming in. And it's a myth that something isn't a Ponzi scheme because it has some underlying activity. Many Ponzi schemes have underlying activity. But whenever this sort of purported return, it's impossible. And it doesn't matter what the underlying business model is: cryptocurrency, forex, day trading, property, something that sounds like it could be successful. And the underlying, if you invest in property, yeah, property will go up over time, invariably, right? Property typically goes up over time. But the growth of that property, it's going to be like anything else. It's going to be up and down, fits and starts, cycles. It's not going to be a smooth, we return, 0.5% per month with little or no variation over time. It only exists in the human imagination. And the reason why performance charts like this really are invented by people, and they are invented, there's no substance behind this, is they're giving the people with the money what they want to hear. If you show somebody a chart like that, it's much easier to get their money than if you show them something that's up and down like a yo-yo. So this is one, that we all know about. If you could flick the switch there. So this is one that OffshoreAlert exposed. I got sued, actually, at the High Court in London as I left the podium of this event, I think 2 years ago. Literally, as I said goodbye to everybody, I left the podium, and I was served with a libel writ on behalf of the guy who ran Axiom Legal Financing Fund, Tim Schools, a former policeman and an attorney. Since that happened, his assets were frozen. He's been struck off as a solicitor. The police incredibly issued me with an harassment warning on his behalf. The police in London, without contacting me beforehand, I left London, went to the United States where I live, and 6 weeks later, I got an email from, it was either the Metropolitan Police or the City of London Police, issuing me with a warning, an harassment warning. It's just incredible, mind-blowing. My big mistake was I exposed a $170 million fraud. So when I was investigating this, I called it a Ponzi scheme, and it was based on, all right, you see that, what's that, orange or yellow? So you see that there, this is their purported performance, and then these other things they're just comparing it with legitimate, I think in this case, indices. So the FTSE 100 and Lipper Global. So you can see for the Lipper Global and FTSE, it's as you would expect, it's up and down. But Axiom was selling it was like a litigation funding based scheme. They were saying, look, these are our returns, right? It's just this diagonal line trending upwards with little or no variation over a long period of time. And it was all proven to be nonsense. Of the $170 million that was raised, it turns out that I think it was 85% of every single dollar that was raised went to Tim Schools. 85%, one way or the other. He'd set up a slew of companies. He was getting 85% ultimately. If you could, so this is an historical one as well, but when I called that a Ponzi scheme, it was literally just based on that chart and me recognizing this is a Ponzi scheme. So I really went out on a limb, right? Because, I can be sued. If I'm wrong, I don't have insurance, because it's too expensive. I prefer to deal with lawsuits my own way. So, to actually say this is a Ponzi scheme, causing it to collapse, my potential damages would be substantial. So that's how confident I am in what I'm saying. So if you could, so this is collapse here. So this one here, I'm going to show you now two schemes that are in progress to the best of my knowledge, have not collapsed. So there was a Ponzi scheme that collapsed relatively recently, a couple of years ago. I think it was based in Guernsey, the United States, Brazil. It was called Provident Financial, I think it was. And they claimed they had an investment chart like this. They claimed to be investing in factoring in Brazil. That's collapsed. When that collapsed, this thing appeared, and this is based in the United States, Brazil, and the offshore component, I believe, is Luxembourg, not Guernsey. But it's very, very similar. It's almost like one Ponzi scheme collapsed. They saw an opening in the market for a new Ponzi scheme that was Brazil factoring related. So they came up with this. I mean, so you don't need to know who's behind this. You don't need to do any other research. If you get a promotional brochure, flick to the performance chart. If it's like this, it is a Ponzi scheme. Now, in this particular case, if you started looking at the people behind it, one of the guys is a guy called John Malmsäter. He's Swedish, and this guy is a nasty piece of work, not just financially, but physically, if you are a woman. So I was doing research on this guy. So one, on the financial side, he's been involved in other schemes that were Ponzi schemes. I've seen a guy give presentations where he talks like he's a genius, like super confident guy, very arrogant, his body language, and he's an idiot in reality. But anyway, on the physical abuse side, I was told that by somebody who was solicited by him that he seems to have a bad temper. So I started doing research and found that he'd assaulted, I can't remember if it was his wife or his fiancée, in a hotel in Europe to such a degree that he got sentenced to 1 year in prison. So that gives you an indication as to how bad it was. He appealed it, and I think the prison portion of it was reduced or replaced by a fine. But he's a nasty, nasty piece of work, which makes exposing things like this even more enjoyable. So this is ongoing. I suspect they haven't updated their performance information recently, so I don't know what's going on there. So if we could flick over one more. So this is perhaps something, I mentioned this Ponzi scheme a couple of years ago during a presentation here, and like a couple of guys challenged me in the audience because this, not all Ponzi schemes are crude. They're not all Mickey Mouse. Some of them have, the underlying business has a lot of substance to it. And this is one of those cases. GSA Coral Student Portfolio Fund. So there are a lot of student accommodation funds. Student accommodation is being sort of portrayed as this can't miss investment opportunity. And there really is no such thing as a can't miss investment opportunity. None of them exist. You only know whether an investment goes up, down, or stays the same after the fact. And then people start saying, I always knew it would go up. Well, you didn't always know it would go up, otherwise you would have invested in it, right? You're just deluding yourself. So student accommodation, the sales pitch is, hey, you've got cities where there are a lot of students, there are major universities, there are always going to be a lot of students. And the student population is growing, the property price will always grow. You can't miss. And you know what, that's a sound argument, right? But you don't know, there could be an unforeseen circumstance. You don't know, right? But the property over the course of time, it may well go up. Property routinely does. But it does not go up at the rate of, 0.5% per month, every single month, year in, year out. Nothing does that. the property market goes in cycles. It will go up, down. The global economy changes. There are so many moving parts, and the net asset value of the fund will change accordingly if it's honestly calculated. So the GSA Coral Student Portfolio Fund, it's based in, it's ultimately owned in the Cayman Islands. The fund itself is domiciled in Luxembourg, and I believe the main guy who's behind it, I think he's British. Prior to doing this, he had another student accommodation fund that they had property valued at something like £1 billion, but it collapsed. The fund collapsed. It was suspended for a couple of years, and then the net asset value was downgraded, and the investors, received a decent dividend, but it had a very similar performance chart to this. So, a couple of years ago, I got into arguments. It was somebody who provided services to the fund who was arguing it wasn't a Ponzi scheme. And I said, listen, I know it's a Ponzi scheme literally just because of its performance chart. That's it. And he was basically saying, you don't have anything else? I don't need anything else. I've been doing this a long time. This, I urge you to make a note of this because it's a high flyer. Nobody other than me, to the best of my knowledge, has said it's a fraud. So please judge me over the course of time. Make a note of this, and then you will read at some stage, if you follow financial news, that this will be suspended. As with any scam, and it is a scam, even though it has a lot of property, you just don't know when it will collapse. Timing is everything. But this will, you'll read, it will be suspended at some stage. My guess is over the next 3 or 4 years, they'll come up with some plausible reason. There's been a turn in the economy or a turn in this, that, or the other. But these returns are controlled. The only way you can return with this degree of consistency is basically all of the money goes into a pool and one or more people decide that, okay, we want to pay out, in order to keep this fund attractive to potential investors, we want to pay out this amount every month. And then that will only vary if the pot greatly diminishes. And when the pot diminishes in Ponzi schemes, typically the returns that they're projecting, they're offering, or they're claiming, will actually go up because they're so desperate for money that it's much easier in their minds to sell a fund if they're offering 1% per month instead of the 0.5% per month that they would otherwise offer. So that's, for me, and I'm sure there are some of you here who think, I'm not sure whether that's true, but it is true, based on my experience, which includes being sued and having my work challenged many times. So another, I want to move on to, financial statements, particularly of companies that are listed on exchanges, which you may be considering investing in. If you go to the financials and you look at related party transactions, any company, and it doesn't matter what they're called, any company that has, cynically any related party transactions, but certainly several, it's just a way of insiders divvying out the money that they've raised. And they might have some legitimate underlying activity, but what it tells me and what it should tell you is that the people running this company, so some of these are overt frauds, right? It's just money going in and all of it's being divvied out. But there are, the more credible sort of scams, right? Which, do have genuine underlying business activity, as I mentioned earlier. And they, they're scamming people, but just more subtly. So any time there's a lot of related party transactions, that is what is going on. Money to varying degrees is being siphoned out on terms that are unfavorable to the company as a legal entity and to the shareholders of that company. And, I think like a lot of this is obvious, but it's amazing to me, like these Ponzi schemes, these fairly crude, you read financial statements, companies listed on stock exchanges, and they're fairly, you look at the related party transactions, it seems obvious to me. But then when you look at the professional service providers, you've got major, well-known companies providing services, and it is astonishing to me that they, with all of their training, I don't even have a degree, I was educated at state school. I've just learned this stuff because it's just common sense. In education, just going through life with your eyes and ears open, and then you come across people who are highly trained. They were educated at Oxford, Cambridge. They have this degree, that degree. They have professional qualifications. And I see them providing services to just garbage, which either they don't really have the ability to detect the obvious, or they simply don't care. And that brings me on to another point that, it's unfortunate, rather sad, that there are you can't rely on well-known companies if they are the auditor or legal advisor or banker to a scheme. A lot of victims, it offers them comfort and that this is not a scam. And I've had conversations with victims where they've chosen not to believe me, because if this was a scam, BDO wouldn't be the auditor. And BDO is the auditor for a lot of Ponzi schemes that I personally investigate. And I don't know why. It used to be Panel Kerr Forster, and then it became BDO. I mean, this is just reality. I'm not saying this gratuitously. But it just isn't a comfort. One of the Ponzi schemes I exposed, the chairman of the fund was the Right Honourable Sir. So his name hasn't even begun yet, right? His name's David Keane. But before his name even begins, it's the Right Honourable Sir David Keane. And he was a former High Court judge in London. And at the time the Ponzi scheme was going, which we exposed, causing it to collapse, he was the president or vice president of the courts in Qatar. And he also belonged to a London chambers. So I tipped off this guy. I anyone who I think maybe their name is being abused, I'll tip off. It's good contact building. Maybe they'll return the favor with some information. Who knows? So I tipped off this guy, I think 4 months before I actually exposed the company. And just to make sure he received my email, I copied it to every single member of the chambers. So I knew somebody received it, and the chances were his partners who received it would have contacted him and say, oh, did you get this, right? I consider myself to be credible. OffshoreAlert's been around for a long time. We've had a lot of success. Never once has our work, been shown to be wrong. So you think the guy, he was the chairman of a fund that had raised over £100 million, I believe. You'd think there would be some natural curiosity, right? At least contact me and say, listen, thanks for this. Or can you give me some corroborating information? Never heard back from the guy. Published the story. The scheme quickly collapsed. I think it was the day the scheme went into liquidation or the day before he resigned as chairman. So this is a revealing insight into his character, because now is the time you should be staying to help out the victims. That is your responsibility as chairman of this company. And this guy was earning, this wasn't, so in his role as chairman, he wasn't earning some nominal fee, which is typically the case, right, with directors, particularly ones with titles. You're just on the promotional brochure because all of these fancy titles and letters that you have in front of your name, right? That unfortunately impresses people. It doesn't impress, it means nothing to me, you know, if somebody's Lord so-and-so. So it should mean nothing. If you're trying to evaluate an investment product and you flick to the director's page or the management page and the board of directors, you know, they have a knighthood, you know, a peer, there's a peer there, and it's irrelevant, you know, because you cannot get a degree in honesty and integrity from Oxford, Cambridge, Yale. Typically, these honors are purchased. I mean, that's the reality of the British honors system, right? You do favors for people, or you donate money, and it significantly increases your chance of being rewarded. Well, it's beyond slightly corrupted. I mean, the British honor system.
I think there's a worthwhile distinction to draw just between the upper and lower.
Yeah. Well, I'm talking about in a business. I'm not talking about. Well, I was going to say I'm not talking about Sebastian Coe, you know, who's a double Olympic champion. But and then I realized that I exposed a fraud where Sebastian Coe, a very close business partner of Sebastian Coe, was involved. As was a former director of Wembley Stadium. But listen, yeah, I'm not. The honors list at its best rewards deserving people. But very often at the business level, it's and you know, it's pretty well known. There have been inquiries on this. Anytime you see the presence of, you know, offshore shareholders or who hold certainly a significant shareholding in a company that's listed on a stock exchange, you might as well just assume it's fraudulent. So if you were potentially considering buying shares for that reason alone, it's not worth it. Because the most logical reason to control a company through offshore structures, a company that's listed on a stock. If you want to control a private company offshore, you're not soliciting other people for money, go ahead. What does anyone care? Maybe the tax authorities, whatever. But if if you expect people to buy your shares on an exchange, and the major shareholders are offshore entities, you know, just paper companies, no employees, no transparency, forget about it. You know, it's basically tantamount to admitting you are engaging in securities fraud. And I'm not making this up. This is just my extensive experience of, you know, specializing in offshore financial investigations and having my work challenged. If I was giving this presentation in the earlier days of OffshoreAlert, I wouldn't be saying any of this because I wouldn't know it. I've learned it the hard way. My mother, who's in her 70s, after I leave London, every November, I go and spend a week with my mother in the Forest of Dean, rural England. So a couple of years ago, I was there, and I just saw some papers lying around. She'd decided to move her entire savings that were on deposit at Lloyds Bank or NatWest Bank, one of the major banks, and invest it in an offshore scheme without telling me, even though I specialize in, I can't tell you how angry, you know, I don't know what, I was just angry at everything. I couldn't believe it. And then I started saying, what do you do? I mean, you want to speak like you speak to your mates. Are you crazy? Are you nuts? What the fuck is wrong with you, right? And then it's your mother, right? You know, but she could see I was angry. Then she got upset. She wouldn't let me read the paperwork. So about 4 months ago, she contacted me in tears. So we're talking about like £70,000, something like that. She'd wanted to move her money back into a bank. And the reason she moved it offshore was, she didn't like the person she was dealing with at the bank. the perception was he'd been rude to her once. It was just, you know. Anyway, so she wanted to move it back, and she couldn't. They wouldn't let her withdraw it. So she calls me in tears, and I love this sort of thing. In my work, I love having confrontations with bad people. But I'm not a psycho in my general life. I don't like having confrontations. But with bad people, it just brings the best out of me. It's my natural element. Having evil people who think they're tough, they think, you know, they're used to bullying, you know, mainly vulnerable people. You know, it brings out a defensive mechanism in me. It brings out the very best of me. So I called her broker, and I basically gave him an ultimatum that unless this money was in my mother's bank account within 2 days, that I would investigate everything he'd ever done. I would investigate whoever ultimately ended up with the money. So I would be relentless. I would expose them. I would ruin their lives. And I'm not talking about making stuff up, but all of my energy would clearly, as my mother, would be devoted to exposing every single thing you do, not just now, in the future. And the money was returned within a couple of days, you know. So it was a happy ending. But when I expose crime, I always think, you know, investment fraud is what I specialize in. I always think about, you know, I've dealt with so many victims, and their lives are ruined. It leads to stress, it leads to people committing suicide, and it's depressing. So that's why I feel comfortable mentioning names like, you know, BDO. BDO, 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 you know. You know, don't choose to dislike me because of what I'm saying. Why don't you just do something about it? Why don't you send all of your frigging auditors to an event like this where you can actually learn something that they didn't learn at their expensive schools and educational establishments or in-house training, you know, because I always, and I get criticism for this. I've got really negative feedback. Every time I've given a presentation in the States, no negative feedback, but there are cultural differences with Britain. You've got this, you know, impoliteness. Oh, it's impolite. You know what's impolite? Ripping off a pensioner. You know, in a lot of schemes I expose, the British pensioners are the targets. And it's disgusting. The day that stops disgusting me is the day I do something else for a living. And then there are certain jurisdictions, you know, I mean, there's a hierarchy in the offshore world. There are, you know, the upper end of the offshore world. You've got Bermuda, the Cayman Islands, the BVI. I've actually got a lot of time for the BVI. In my experience, you know, they are what they are, right? Everything's a paper company. But, you know, they are, when something's brought to their attention, in my experience, they are responsible. They had a criminal conviction or two of like local people for corruption, which is almost unheard of in the offshore world. And then you've got the seedy end of the offshore world where, quite frankly, anything that's domiciled there, you've got to assume is fraudulent. I mean, honestly, there's no other reason for anyone to register an offshore company in Nevis, St. Vincent and the Grenadines, you know, the Cook Islands, the Seychelles, unless you're up to no good. I mean, if you weren't up to no good, you would choose a jurisdiction that was respectable. It's just common sense. You choose one of these jurisdictions, so you do what the hell you want. You know, in Grenada, in the late 1990s, they licensed about 44 offshore banks. Every single one of them was overtly fraudulent. So the country, as a business decision, went into the fraudulent bank business. Because they're so, you know, they're so desperate for money, they don't care. And, you know, we got, the chief regulator, I got sued for libel, and they also sought an injunction. I couldn't do my job from the UK, because in the UK, you can go clip-clopping down to the High Court. As soon as I'd do a big investigation, not publish, put my questions to the other side shortly before publication, let's say a few days, maybe a week. If this was Britain, they would go clip-clopping to the High Court. They would get an injunction on an ex parte basis. It would be served on me. I wouldn't be able to immediately publish. I would then have to spend tens of thousands of pounds to have a hearing over whether the injunction should be permanent. These guys went to federal court, I think it was federal court in Miami, and the judge told them to F off. They didn't get a hearing. It cost me nothing. That was the injunction. They proceeded for a very short while, hired a big law firm, Stearns, Weaver, Miller, something, Hal Haddoff, blah, blah, blah. And big law firm. The bank that was suing me, they were offering CDs 250% per year interest. That's how crude this was. The chief regulator, Michael Kraft, chief financial regulator, prior to becoming chief financial regulator in Grenada, he worked for the transportation department of a Canadian regional government. He swore an affidavit in support of the libel action submitted to the court, where he said it wasn't in breach of any rules, regulations, laws, it had no complaints, blah, 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 blah. We expose it, it collapses. 5 of their officers were criminally indicted at federal court in Oregon. They interviewed Michael Kraft as part of the criminal investigation process. Obviously gave him an ultimatum, right? He, even though he lived in Grenada, he wasn't obligated, probably legally, to speak with him, but they probably said, you speak with us or you're going to be included as a defendant. So he admitted, they asked him about his affidavit in a libel action, a few years prior. He admitted that he'd committed perjury. Like it was nothing. He literally admitted, this was in the criminal court pleadings, that he'd lied in the libel action against me. And that's the chief regulator of this jurisdiction. The Prime Minister of Grenada, I was told there was a video of him receiving $500,000 in a briefcase from Eric Resteiner, who's a convicted fraudster. And Resteiner was bribing him, but he covertly recorded it for blackmail purposes in the future. And so I had a conversation with Keith Mitchell, or Thief Mitchell as he's known in Grenada. So I had a conversation with him. And the guy, he denied he'd received $500,000 in a briefcase, but he admitted, he said, no, it wasn't $500,000. So he didn't say, oh no, that never happened. He said it wasn't $500,000, it was $15,000, as if that was okay. And he said, oh yeah, this is how we work in the Caribbean, it was for reimbursement of expenses or something, right? For some trade travel, whatever, Because Eric Resteiner had been appointed Grenada's honorary consul to the Bahamas or somewhere. A thing in the Caribbean is they do appoint these honorary consuls, and they typically are fraudulent. Jonathan Kirshen, St. Kitts and Nevis, he's currently in prison in the United States. Eric Resteiner was in prison in the United States. That was Grenada. And in the Bahamas, you had the Pirate of Prague, Victor Kojeni, who I know there was an indictment, but I think Bahamas won't extradite him. So there are certain jurisdictions that are so Mickey Mouse, it doesn't matter what the promotional material, it doesn't matter how good this sounds, right? It's just, if you're in Grenada, you're in St. Kitts, Nevis, Dominica, it's fraudulent. Move on to something else. All right, so I'm waffling on here. But let me see. Oh, and the other thing is, any given time there are fads around which fraudsters absolutely pounce on like a leopard on one of the National Geographic videos, like chasing some gazelle, because gazelles always seem to be the prey and they never seem to get away. They pounce on anything that is a fad, and they base their fraud around it. Forex, binary options, day trading. It used to be bank guarantees, So what is currently happening is blockchain and cryptocurrency particularly. So every offshore center worth its salt is looking at this, passing legislations, regulations, wondering how we can grab a piece of this. Crooks are all over this. So Bermuda, which is a respectable jurisdiction, it's the very top of the offshore world. It's the world's 3rd largest insurance and reinsurance market. The reinsurance market, I get the impression, is waning in Bermuda. Like Ace and XL, the big property catastrophe companies, they re-domiciled. They were actually domiciled in the Cayman Islands, physically based in Bermuda. They re-domiciled from Cayman to Switzerland, I don't know, several years ago, and they've been moving staff from Bermuda. So Bermuda is clearly wanting to diversify. They've passed blockchain legislation. I sent a researcher around to the registered agents to get all of the share registers of the blockchain-related companies. And some of them refused to give them to me, so I had to call them and basically threaten them, right, with bad publicity. I was going to get this information. I'm legally entitled to it. We can do it the easy way or the hard way. It's up to you, but I'm going to get it. So, you know, because it's enshrined in the law. You're acting illegally. So I'm going to write a story. If you're acting illegally here, what other illegal acts are you committing? That's a logical thing to ask in a blog. If you can't abide by this simple law, God knows what you're involved with, right? So do you want me to write that, or do you want to just comply with the law and give me... So if any of you actually, if you're denied access to information, like you're entitled to share registers, you can spend thousands, tens of thousands of dollars litigating, and you will eventually get access to it, or you can just give me a call. I'll make a free call on your behalf, and you'll get it pretty quickly. And I've done this many, many times. I think I mentioned yesterday, I sent undercover people into registered agents to secretly record them being denied access to what they are indisputably, no gray area, legally entitled to. So Bermuda, so anyway, there are two we got the share registers, then I ran background checks in the United States, because they're typically Americans or North Americans who are involved in the Bermuda blockchain business. So I ran their names through databases, and man, there are two companies where there are several people involved who just have this litany of judgments, arbitration awards, allegations of fraud, who've never done anything legitimate that's discernible in their careers. So one of the companies is called Arbitrade, and the other is called Ulala, UULALA. And these are doomed to failure. Bermuda has embraced them with open arms, and the Prime Minister even came out and said that we've run background checks and it's all kosher. I ran background checks, and it's just judgment. So either the Prime Minister is lying, or somebody has lied to him, whoever was responsible for doing it. I need to find out actually who the Bermuda government hires to do their background checks, because I think I'll include that in the story. It'll be quite funny if it was like Kroll or something, Anyway, so having said that, but Kroll is a very good company, by the way. So now I'm going to introduce David Mapley. So he's the ex-hedge fund manager turned investigator, and he's going to talk about, I think, maybe financial statements. Is that? Or?
No, I'm talking about avoiding, detecting fraud.
Yeah.
And,
okay.
Shall I come up there?
You can go there if you want.
Okay.
It's up to you.
Thank you. Good morning, everyone. Thank you, the Right Honourable Sir David Marchant. So I run Intel Swiss. It comes from years and years of me losing money. My company's losing money investing. That's what I was doing for a business. Thankfully making more than we were losing. But our field of operation was in what we call emerging Europe, from Vladivostok to the Berlin Wall. We did that from the early 90s all the way through till about 6-7 years ago. So we saw an awful lot of interesting scams, frauds, people with weird ideas. We ran our own investment funds. We went out and talked to investors. We seeded funds. We looked managers in the eye, new managers, people who had long track records in other fields. And it was interesting, a lot of experience. And in an altruistic way now, we spend our time trying to help people who've lost their money, who've invested, thinking it was the best thing since sliced bread. They bought the dream. They did all the things that we scratch our head and like, how could you do that? But it's a reality. And in a very cynical way, and I think you'll find that this cynicism comes to you over time, as you've heard David, as you will hear me. You almost start to distrust everything. The big institutions, regulators, law enforcement. Generally, probably the only honest crowd in the industry of investment is probably the press, who run the risk of being sued into oblivion if they get it wrong, but actually are almost a necessary force for exposing what goes on in an industry which, because it's money, and there's the glory and the gains that go with it, it attracts all types of characters. I'm actually in the process right now of taking over, I wouldn't call it hostile, but Luxembourg does, but taking over an umbrella fund where a number of the tranches of those funds have lost all their money. And it'd be really hard for you to realize that this money was being lost until it actually got lost. Funny enough, we did see the straight line, the Ponzi scheme curve, which, so David would have picked it up straight away, but the big institutions didn't, and the regulators didn't, and the auditors didn't, and the administrators didn't. Real top quality household names. And as we started digging into statutes of Luxembourg of 8 years ago and started realizing what was happening, you could see it was all being primed for ultimately one day a big fall. And so as part of taking over and looking to rebuild this fund and recover money, I too am going to be sitting there interviewing new managers in the future to try and rebuild the fund. So I guess the very first thing that I would look at when I'm looking at a fund is like, so why is this fund set up? Who are the guys running it? I mean, it's the most basic question, but you know, when you get someone who has traded foreign exchange in London, who's suddenly running a South American timber fund, you kind of think like, well, you know, either he's a tree hugger that's just come out, or he's looking at making money for himself on a fad, or he's met someone in a pub who gave him a great idea. But you can rest assured that eventually, if an autumn hits his timber fund, he is possibly going to try and cut and run. And so suddenly the money's going out, it's going in his direction, and it's not going in yours. So you start to look at, well, who's the guy? It's kind of getting into an aircraft, and who are the guys in the pilot's seat? Are they going to crash it into the Twin Towers, or are they going to actually fly you to the destination safely? And what's the training and the background? And what have they got at stake? How much of their money is in this fund before you put your money in? So we'll ask all those sort of questions. So philosophically, you know, this fund that's presenting itself to me, who are the guys running it and why? And what's their motivation? Is it their first time? It all screws up, they just cut and run? Or do they have a long-term reputation? Have they done this before and been successful, and it's an iteration of a successful theme, a son of, an expansion of the business? Or is there a big institution behind that will make sure that if it does go a bit south, that there will be protections in place? But you generally have to start on the premise of don't trust anyone or anything, and then proceed from there. So here's a fund. A gentleman sitting in front of me saying, I want to launch this fund. And you know, the first question you start asking is like, so who's going to make money out of this fund? Okay, well, of course, you've got your managers and your administrators. So you look at, you know, the fees that are going into that. And there's a general sort of guideline of, you know, 1 to 2.5%, depending on the difficulty. Then there's a performance fee that makes them do a good job for you, because that's how they really get paid. And you look at, you know, the fee structure. You look at the board of directors, and then you start to say, well, how much are they getting paid? And are the directors actually the same as the managers? So that everyone's working just to help the managers make money, but you start to think, this is for them to make money, and they're presenting me with, say, can we use your money to make ourselves money? So you've got to really start looking at the managers, the fees they're paying, and then the directors, and is there independence or is there overlap? Or even if there seems to be independence, dig around a bit. And it's you know, get some interesting revelations. Fee structures, it's kind of interesting because it seems that regulators don't really sort of dwell too much on fees. And I say that because I'm investigating a fund right now from Bahamas, which has a 98% performance fee. Even I've been shocked by that, and I've seen some hairy stuff. And I talked to the regulators who didn't answer that because they're the names on the document, they signed off on it. But the investors that we're working for, they said, like, we can't believe this. Like, and I said, well, didn't you read the documents? They said, well, actually, the guy who put us into this is now running the fund. I'm like, whoa. But, yeah, we always say, so who's going to make money? Another big question is, what about the placement agents? So you're investing and your placement agent brings you a fund. No harm in asking, how much are you getting out of this? And are you getting it up front? Do you have an ongoing carry? Because it's amazing how many people have a short-term focus of 2-3 years of blasting every investor they can into the funds at big retrocessions or big upfront fees, and then when it all goes to hell in a handbasket, they've retired, they've got their yacht sitting somewhere in an offshore jurisdiction, and you're left with suddenly a loss. All the fees have been taken out of it, and everyone's very happy. Service providers, they just clipping coupons, charging money month after month. We look at, for instance, like the structure, custodians, people who invest through life companies who actually don't even bother sending shareholder information down when something's gone wrong with the fund. They said, well, we charge, 25 basis points a year for sitting on your assets. We're not going to send a shareholder letter to every investor. We're not going to vote on your behalf. We're too busy collecting fees. So suddenly you put your money into a fund, placement agents made all this money up front, you've got no voting rights in the fund to even overthrow the guys who are running the fund who've lost all your money or ripped it off. And you suddenly find yourself very lonely out there. So, we look at, first of all, who's making the money before you as an investor even get a look in. And then there's your money that you're putting into this fund. Well, it's always interesting that you get presented with an investment proposal, and the first thing is like, so where am I going to be sending the money if I invest in this? Because that's often quite interesting, that you have some poor quality jurisdictions where you almost sense the minute you set why your funds as an investor, it's kind of kiss it goodbye. And there's like maybe a mismatch between where the money's going to go and where the fund's supposed to be operating. Or it's in a jurisdiction where there's such horrendous banking secrecy, or banks come and go so quickly that you'll never get any records or audit trail of where the money went once it hit the fund, and a few quick iterations and online internet banks in Eastern Europe and UAE, and it's gone. So, where's your money now? So you've already figured out whether you can make some money in this ahead of all the other guys who are in the queue. But then, where's your money going to go? And secondarily, what is it going to be spent on? How much is going to be actually invested, do you think, versus how much is going to go to those big, glitzy lunches, road shows in Singapore and Dubai and Bali and some nice resorts to get investors to be putting more and more money in? And the VIP investors who get increased returns by bringing their mates in. And you start to see, well, so my money's actually not being used for the investment purposes, it's actually being used to promote more of this fund or this investment vehicle. And all of these are instantly putting us on guard about whether we should be investing in this. And then kicking the tires. Some investment funds, they show you what they're actually investing in, and it doesn't take much work to actually dig into these investee companies and see whether they exist or not, or if they exist, for how long they existed. I've seen companies that literally set up weeks before the fund launched, and suddenly they're getting huge loans being granted to them, and then you start to see a match between this investee company and where it was, and one of the fund managers who happened to have been there for 8 years before he moved somewhere else and set up a fund. And you start to think, again, this money's going somewhere that really doesn't smell right. And then a lot of money managers, fund managers, investment funds, they'll have websites. And websites are always very telling for us. One of the first things you do is actually look at who actually registered the website. See, whether it was a credible source, a name, a phone number, an address, someone that actually you can actually relate to the fund. And then secondarily, we go into the fund itself and have a look at the people on the website. Do they match up with the documents? Who are the directors? Who are the managers? And that's often an interesting exercise. I mean, we've just gone through the 100 years of commemorating First World War, sadly. I do remember looking at one investment fund where the whole management team was pretty much fictitious. They got the names of most of the management team and advisors and directors from war graves website. The pictures were from a modeling agency in Sydney, Australia. And all the backgrounds were so kind of vague. It's like, he's been in the finance industry all of his life and with all this experience, he's going to be a good director. Doesn't mention any names, and you go and look on LinkedIn, the person doesn't exist. And you think, well, if he's not even prepared to talk about his background, how are you going to trust your money to this organization? Now, these all sound like commonsensical, but people sort of get hooked in. They sort of think about the money they're going to make, and they start to blink it a little bit. So we always say, just do a few little checks, scratch a bit, and see what comes up. And then, of course, if you're going through this, and so far you're kind of satisfied with how you're going to be investing, the question is, how do you make your money? Because that's what it's about. You're investing to make money for yourself. Now, as David's mother found out, sometimes you think you're investing and it's going well, but the minute you start to ask for your money back, the drawbridge comes up, the portcullis comes down, and you're being closed out of this. We all think it's good practice, if you really like an investment, you want to invest large in it, to invest small and see how it runs for a while, and then go through the exercise of asking for your money back. See if it's a very liquid fund and offers monthly liquidity, try it out. Don't say this is great and pile in, and then suddenly there's a problem with it. And where are these returns coming from? I mean, now interesting that those sort of Ponzi schemes, you see, the straight line. Well, in theory, the administrator was doing that accounting for the NAV, because it's, that's how funds are supposed to work. The administrator looks at the assets as a valuation monthly, works it all out, and gives a number to be posted on a website or ultimately fed over to an auditor. So when you see these returns, yeah, you can blame the managers, the Madoffs as well, but question marks start to arise when it comes to the administrator as well, because their job is actually to do the NAV accounting. And, some of these companies may have used very credible, very big global administrators who often are just too busy to really bother too much about a small $50 million, $100 million fund. They'll clip the coupons, they'll charge their $35,000 a year, plus, and really, a timber fund or, sort of a Bitcoin fund, they may not have the sophistication to value it, and they just say, just find an advisor that we can trust and give us a valuation each month. So, when you see something that's a very difficult concept of value, you've got to be very cautious, because sometimes the administrator hasn't got a clue how to actually work out the NAV, and yet they're happily signing off and posting it up there, and you are subscribing or redeeming based on these valuations month after month. So we always, suggest that if it's too difficult, it's not right for your money. It really isn't, because it may be too difficult for a lot of the service providers who don't realize they're being party to a big fraud. So we look at red flags. Here's a fund that's been in existence, for example, for a while. What really gets our guard up? Well, the first thing is when the administrators or the bankers or the auditors change. Now, these guys will generally see the inner workings of the fund before you do as an investor. So when there's changes afoot, you need to ask why. Generally these companies are approachable. You can, write off to the administrator, I'm an investor in this fund. Why have you changed? Or what, you may get a defensive response back, but sometimes you can actually, if they have concerns themselves, they start to think of their own legal liability, and you can start to sense that something's happening. So beware. Obviously, the constant returns issue, as David clearly pointed out. I mean, I've never encountered a fund yet that made money month after month. That wasn't a problem. It's a fact. I mean, especially if you're investing across a number of jurisdictions with foreign exchange risk, things move. You expect to lose a little bit of money once in a while. It's kind of normal. It's like saying to anyone, you know, I'm an investor. Well, anyone can invest. Any fool can invest. The question is, you know, how you invest and did you make money? Well, anyone who's in the investment game will lose money. Fact of life. And if they haven't, they're either that one person out of 7 billion who's a complete genius, or he's a liar. So, and people say, oh, we've never lost money. You know, we've got this black box. It's great. It's like, no. It doesn't work that way. And then you see sometimes a fund will start to, you know, maybe picked up by the audit statement, but they start to change the investment theme. A fund that doesn't put more than 25% in one of its investee companies suddenly has 70% all basically bet on Black 13. You know you're in trouble. I mean, it's not that this investment is so good. Yeah, they're just chasing profits at your expense. They're gambling it all, basically going to roulette table. And it's a no-no. If you're going to entrust your money to someone, they have to be responsible, not just chase profits. You know, like we have a diversification for a reason, unless the fund precludes that. But you know, when you start seeing variation of the investment theme, and it's all like being skewed to one investment in particular, you know, it's a big red flag. So, another red flag because it's a weird structure. My Luxembourg fund right now lost all its money because Luxembourg was investing into commodities groups within Europe, but they put it all through Hong Kong. Right? Why on earth? You know why? I mean, I've set up lots of structures where between Luxembourg and Switzerland, very tax efficient. And like, why the hell is a Hong Kong company in the middle of all of this? The answer is because moving the money through there, they're sort of detaching the money flow away from the field of investigation in Europe, and suddenly you've got 1,000 companies in Cantonese characters being registered with the same sort of names. It becomes a nightmare to try and figure out what the hell went on. And it's over there. It's a long way away, and you know, people just bring down the shutter and say, we can't dig into that, it's too hard. So, you know, all these red flags when they come up in a fund, you know, like including your own smell test, you know, talk to the manager, the directors, kind of, you know, tell you should be backing away from your investment. And there's no harm in, if you're not sure, getting out early. And actually, a lot of people make money out of Ponzi schemes because they get out early on the premise that someone else is like going to be putting money in it, and you know, it's.
But even then, you're subject to clawback clauses.
You are, yeah. So, how do you avoid frauds? Funny enough, you can do an awful lot of checking beforehand. You can check the people, check the background, even check the investment theme. I mean, there's so much now out in social media. You'll always pick up little hooks of something you think, oh, that's worth digging into more. And, you know, even on an ongoing basis, monitor media. See, you know, some of these blog sites, shareholders getting, you know, upset, angry, rip-off reports, whatever. It's actually quite revealing when you read it. And you see how people have left a legacy somewhere else and moved to a new jurisdiction and started again. And the world's a smaller place now, and information is out there, and it's very useful. Or pick up the phone and call David. Yeah. Investors, we always encourage them to share information, reach out there and talk to other investors. It's amazing how sometimes when funds are being operated and they're not very clean, that people get different stories depending on who they are. A manager will go and do a presentation to one guy and tell him one story he thinks he wants to hear, go to someone else and give them a different story. There's no consistency. He's kind of doing what he can to extract the money out of you and telling you what he thinks you want to hear. So there's no harm in sharing with other investors and seeing whether the story is consistent or not, and share some war stories about a particular investment and see what comes out of it. Ultimately, with a fund, the directors are responsible. The directors have the power, in theory, to fire the manager, fire the advisors, fire the administrator, fire the auditor, fire the custodian, fire everyone. So, you know, the strength of an investment fund is often denoted by the strength of the board of directors. The relevant experience, are they independent? And if you write to them or contact them and they don't come back to you, you've got some issues, I think. As you rightly pointed out, you alerted a chairman of a fund, like, we think there's a problem. The fact there's like deafening silence tells you there's a problem there. And I guess the final point, is avoid the poor jurisdictions. Because, once your money's gone in there, there's generally no recourse. And we always sadly say it's better to try and check before you invest as opposed to come to us afterwards and say, can you get our money back? Because that's hard work and it's difficult. And a little bit of forethought and a little bit of digging around, kicking tires beforehand really save you a lot of hassle and a lot of money and a lot of angst. So, that's it.
Yeah, do you mind if I stand so I can
Sure,
see what I'm
yeah.
presenting? Morning. Thank you. David, you mentioned in your opening remarks that there's nothing like experience, and I couldn't agree more. I learned kind of the hard way how not to invest your money, especially when living as an expat overseas. So my story starts in 2014, almost 5 years ago. And as I was preparing to come and give these remarks, I found this. These are the actual New Year's resolutions I made in 2014. And I wouldn't share this with my mother, but I'm sharing it with all of you, and I think the BBC, because you're mostly a group of strangers. These were, keep up with the Economist, not get too fat, all those things that we all don't succeed at. Try yoga, and most importantly, get my retirement savings in order. Not that I was completely financially irresponsible, but I really didn't have control over where all this money was and what was happening with it. At the time, I was living here in Mozambique with my partner. So I'm not in the financial industry like all of you. Today's a holiday for me. I had to take leave from my real job. I work in development, in international development at the moment, living in Kenya. So this advisor came into contact with myself and my partner, and he had all of the answers to all of the questions that we had about how to save and invest our money. He was very friendly, he was British, he was nice, he was accommodating, and he came to my office and spoke to me about investing my money. And he had answers to all the questions that I had. He reaffirmed my belief that the time to start investing your money is right now. He was able to reaffirm my understanding that the best amount to invest is as much as possible. And he helped me to understand that the best way to be sure at the end of the day that you would be successful is to commit to regular savings. So you need to sign up and commit to this every month for the next 20 or 25 years. So what I committed to was investing a huge amount of money every month for the coming 20 years. And I did that because he had told me that, well, this is flexible. There's an initial period where you're kind of locked in, but after that you can reduce it. And once you reduce it, then it's more flexible. And you want to sign up initially to a quite high amount because that will give you this bonus and will triple your initial investment. I won't tell you how much it was, but it was painful. So yeah, we had about 3 meetings. On the third meeting, he brought a stack of papers that I hadn't seen before, asked me to initial, sign, and then he sprinted out of my office. And I was signed up, and every month my credit card was charged for this investment amount, which is how I afforded the air miles to be able to come here from Kenya to visit all of you and share this story. 2 years in, the so-called initial period, the lock-in period was over, and I contacted the office, and they had an office. I was in Mozambique, this was Maputo. They had an office in Maputo, but they closed that, and this advisory firm that you all know had an office in a neighboring country. So I called this woman and said, now that my initial period is over, I would really like to reduce my contributions. And she said, well, are you sure you want to do that? Because, you're being charged these fees on your initial contribution, and if you reduce it, the fees will be more than your contribution, and you won't see any growth in your investment. And I was like, well, that doesn't sound like what's his name had told me, who had by then left that organization. And she said, well, that's how it works. He didn't tell you. And I said, no, he didn't tell me. So then it started to occur to me that maybe this guy wasn't so nice, and maybe this wasn't such a good idea, and maybe I shouldn't have invested in this. So I started to Google. And this is what I should have done much earlier. Google told me that I was not the first person to have fallen for this trap. There was one particular advisory firm, one particular insurance firm, who were in cahoots with each other and who had done this repeatedly to so many people all around the world, and in particular to expats living in Africa and Asia and people working in development and, or we thought, trying to make the world a nicer place. Anyway, so I took a so-called payment holiday from this commitment that I had, and that gave me some time to figure out what I was going to do. And I came across this guy in Germany, and this German guy seemed to have had a similar experience in his jurisdiction. He wouldn't give me too much advice because he's like, you know, I only work here. But it became clear to me that the situation was similar in that the product I had invested in was very likely not registered in the jurisdiction where I was investing, and that potentially the advisor who had advised on the product was also not registered, neither he nor his firm. But those are things I had to figure out. So I first went to both of these companies, the advisory firm and the insurance company, and I said, you know, I would like you to confirm, please, that you and your people and the products that you were brokering and selling were duly registered to do all this business where I bought, which was in Mozambique. And some of these people said, yes, we had a registration. We were a registered company. Other people said, well, you know, the terms of the acceptance of your contract took place in Guernsey, so it's a problem. And I'm like, I've never been to Guernsey. I don't even know where Guernsey is. Suffice it to say, these were very difficult times, and this led to sleeplessness, led to the completion of the first of my New Year's resolutions, although it was by now 2 years later, which was to experiment with yoga and meditation to try to save my sanity. In the meantime, I had moved to Kenya, and on a work trip back to Mozambique, I met with a local lawyer in Maputo. And I explained to her what I thought the assignment should be, which would be, please look at the advisor and look at this firm and look at these products and find out whether these things are registered properly in this jurisdiction, and et cetera, et cetera. So she found the following things. This is Mozambican insurance regulation, and it clearly states what you need to do in terms of naming your company, registering your company, speaking with the Ministry of Finance, and there's an insurance oversight board when you want to do this kind of business. We found the registration of the company, and we found the information around their shareholders, one of which is European, and the registration of the company, the parent company as well, which is a European company. We found the statement of, I don't know what you call it, but on the trade register or whatever of the company and their mandate, the mandate that they had in Mozambique was only to do financial consultancy, which just means like making Excel tables and things. It doesn't mean advising on insurance, brokering insurance, which is what they were clearly doing. Finally, this was the finding of the lawyer, that the company was unregistered, that the sale was therefore illegal, and that I should have been compensated, that they should have been subject to those penalties, and that I should have been compensated for this loss. We continued to email back and forth both of these companies, and so the insurance company and the one who had advised us. And we got answer after answer after answer. We're doing an internal review. We've looked at it. You know, you signed this. This is your signature. Don't you agree? Weren't you warned? You should have known. And then through some sloppy emailing and internal lack of protocol on their part, we saw this email, which came through from their lawyer, who was a contracted lawyer, who said, we have taken the position with them that the sales were not illegal, and the advice given was correct. And to me, I'm not a lawyer, I don't know anything about law, but to me it seems like if you say that we have taken the position with someone, that means like, basically, we just told them that story, but that's not the case. I could be wrong, but you can inform me of that afterwards. Finally, another email that we got from them where the person that I was dealing with in this other African country, not Mozambique, sent this to me saying that she had spoken to the head of not the firm where she worked, but the actual insurance company, where they admitted that they knew that the advice was bad, the advice of that particular advisor had been bad on a number of occasions. So we took all of this information to them and got nowhere. We took it to the media and got nowhere. I met with the FT, got nowhere, and didn't really know what to do. Finally, we found the Channel Islands Financial Ombudsman online and submitted a report and a complaint, and we sent them all of the documents that I have shared with you just now. I'll fast forward beyond everything else that happened in the story, but all I can say is that they're a very helpful group of people, and I'm very thankful for their support. Now, David has asked me to speak about the model that was used in duping us out of our money, and having been through it myself, I know exactly how it works. I call it BAD's model. It's a bit cheesy, but I think it's accurate. The first is to befriend. And when you're an advisor, especially if you're not selling good products, what you need to do is you need to create a rapport with the person you're advising so that later when you bring the stack of papers for initials and signatures, they won't ask you too many questions because they're going to feel like, it's like counting money when your friend owes you money and like you just take it. You don't really flip through it. Wouldn't be polite, right? The same way it wouldn't be polite once you have this rapport with this guy to look through all this and say, wait a minute, I want to read the fine print before you come back. You don't do that. You just sign it and he goes away. And he ends up making, by the way, thousands and thousands of dollars on the commission that he earns from this thing. Second thing is attract. So they reaffirm these beliefs that you have. So I understood, like, I need to start now, I'm in my 30s, I need a positive return, and I need to commit to making monthly payments or regularly investing in my future. So that gives you these things, and then you kind of latch on to those positive attributes of this investment, which allows him later to distract you from any questions that you have. So if you want to know, like, what is the fee structure on this? Or are you sure that's right? Is that not too high? Where is this thing held? He goes back to the things that attracted you in the first place, distracts your attention from that, and says, yeah, but don't you know the time to start is now, and you need to invest and make a regular payment, et cetera, et cetera. And finally, sign and sync. So that's when they get you to sign the thing as quickly as possible. And then you need to be sunk into your investment so that you are fixated on the sunk cost that you've already invested, so that when you start thinking about asking for your money back, you have to figure out whether or not you really want to get rid of all of that money because it's an investment that has no encashment value, right? So I've put in $10,000, $20,000, $30,000, and well, you have to walk away from it if you want to get out of this plan. And I think for many people, they're unable to make that rational but difficult decision that actually I should walk away from this, and sooner better than later. So that's the model. I hope you don't ever use it, but if you see it, that's how it works. That's my personal story, and it has kind of led me to want to tell it and hopefully help other people not fall victim to the same plans. I want to mention two other things. I told you that I'm working in international development, and I want to mention two other points that I think are important. These are some people. So Cyndi Lauper, who's an inspirational figure for many of us, tells us that money changes everything, and I think it does. I think it's important for us to remember that wealth leads to more wealth, wealth leads to opportunities, wealth leads to all these things that are good, and helps us get even richer. But for poor people in the world, I think they don't have that luxury, and being poor is extremely expensive for so many people. And I'm happy to be here with all of you who are working to kind of promote integrity in these financial services. Oxfam really came out with a report recently where they said that the world's 42 wealthiest people hold as much wealth as 3.7 billion of the poorest people, which is the bottom half. It's half of the world's population. So on one hand, you have 42 people. Their wealth is equivalent to the poorest half of this planet's population. At the same time, the level of income that you need at which to be at the top 1% globally in terms of income is $32,000, meaning that all of us are extremely wealthy and part of the world's top 1%, meaning also that we're the haves, kind of in the world of have-nots. And I think, what's the point of that? Why should we care? And we don't have to. I guess we can say, well, that's just the way it is. Or we can say, we should occupy and fight back against this rich 1%. But I think what we can also recognize is this amazing opportunity. Because when you have such a drastic concentration of wealth among so few people, I think that gives us the opportunity to change very few minds and have huge influence on the way that money is invested and the way that finance influences our society, which I think is something from the conversations I heard last night around politics and et cetera, like maybe it's something we should consider. But those are thoughts beyond my personal story. So thanks for allowing me to be here, David and everyone else. Thank you for listening to this story. Thank you for taking me along and allowing me to tag along on this journey. I would kind of like to mention that this has led to kind of a life-changing situation for me in that I'm now looking at how I can help other expats especially avoid this situation and hopefully educate them well enough to allow them to prevent having to go through this themselves because it was really difficult and I don't think it's something that more people than me should have to learn the hard way. So thanks.
Daniel's so polite. Is this on? Daniel's so polite that he didn't mention the name of the company. I believe it's Devere Group. And I know somebody who sat in on a sales training presentation that they conducted in Miami. And one of the techniques that they, as a group, teach their salespeople is ditch the bitch. Isolate the male member of the household, get the woman out of the picture because he's an easier mark. So even though the phrase is insulting to women, it's actually a compliment because women are considered to be financially have more acumen than men, are probably less prone to sort of ego and flattery and everything else. And Devere Group recently settled an SEC action for, I think it was $6 million. They have got into regulatory issues in several countries, and one of their idiot salesmen in Miami tried to solicit me to invest. And you had that BADS thing. The first one, the B was for befriend. So he never got to the befriend stage. He called me and wanted to, take me out for a few drinks, dinner or whatever, and I told him to get lost. Does anyone have any questions?
Just one comment. I won't confirm which company it was, but I would say that the advisor who duped me also duped my partner and now husband. So the whole bitch thing didn't really matter too much.
Thank you very, very much, gentlemen. Ewan Grant, Institute for Statecraft. I was former client of Chase Devere. I don't know if that is, in fact, the Devere Group, or if there's any connection. And certainly your experience, I've seen that kind of thing before, and how the very fact that they're selling an insurance product when straight, pure investment products have been superior and more flexible and cheaper in many jurisdictions for decades now, says it all. But of course, how many people know this? My question is in relation to the regulators and the middlemen. Do you see any signs in light of Madoff and the others that David Marchant so clearly identified, that both regulators and professional service providers are doing enough, quickly enough, to highlight the red flags and to point them out to whoever needs to know, which is a very, very long list? Thank you very much for that red flag list. Thank you.
Professional service providers are simply interested in fees. The salesman interested in commissions. I mean, that's just the way of the world. We're all interested in money. You know, and in my experience, when it comes to money, I mean, few people have, you know, morals, ethics. It's money, 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 money. You know, they just don't care. I mean, the people I can't, even when I try and tip people off, they, you know, they're not interested. You know, when I expose things, you know, you'd think the professional service providers would call me and say, well, I'm very interested in this. Can you provide more information? I don't get that at all. They blame me, you know. You know, professional service providers in offshore centers, their first responsibility is to themselves. Their second responsibility is to the jurisdiction. And God knows where the client lies in their sense of or maybe the clients of their clients, you know, the investors. You know, there is this tremendous loyalty to jurisdictions. It's quite interesting in small countries.
I don't want to agree too much with anything David has to say. I don't agree with everything he has to say. However, I have been appointed on a failed fund by the courts, and some of the more outrageous statements he made in his reporting were proven to be absolutely accurate in retrospect, so I'll have to give him that credit. Just wanted to give one more watch out for, and that is, if you invest in an offshore structure, you need to look at the documentation carefully, because more often than not, negligence on the part of independent directors and auditors is acceptable. That is what you are signing up for, so you need to be aware of that.
Yeah, it's virtually impossible to hold independent directors liable for the fraud committed by the fund that they were a director of. They are indemnified typically by the company, and you cannot hold them personally liable. And I think there was one case in the Cayman Islands, right? I can't remember the name of it. It was Weavering, right? Where I think at the High Court, the Grand Court in the first instance issued heavy judgments against him, and I think it was overturned on appeal. You know, and I know in Bermuda the indemnification will hold up, and even I can remember when that law was passed. A guy used to be the president of the Bermuda Law Association, whatever it's called, said it was a license for incompetence. I mean, that was a lawyer in Bermuda saying that this is a license for incompetence on the part of Bermuda's directors of companies. You can't, unless you can show that they knew about the fraud, which is very, very difficult. So just like gross negligence, you've got no meaningful route of holding them financially responsible. You have to really show that they knew about the fraud or participated in the fraud. And you get some professional directors offshore. They're directors of literally hundreds of companies. So how much care, even if they are, you know, they sort of do their best instead of just mailing it in. If you're the director of hundreds of companies, I mean, you can't possibly know what is going on. I can remember the IPOC International Growth Fund, which was a mutual fund in Bermuda. It didn't even meet the definition, the statutory definition of a mutual fund, because it only had one investor. So I think mutual funds by law have to have X number of minimum investors to be classified as a mutual fund. And it was a money laundering vehicle for Leonid Ryman, Russia's telecommunications minister at the time. So, you know, litigation happened. They interviewed a Bermuda attorney who was not only a director of the fund, he was vice president. So he had an officer position. And they interviewed him, and during the deposition, he said, listen, you know, somewhat sheepishly, I know this doesn't sound too impressive, but he said, listen, I knew nothing about this fund, you know. So I used to take instructions, and that was it. You know, and nothing happened to this guy. He wasn't even he wasn't even disciplined by his professional body, his regulatory body. Michael Alberger in the Cayman Islands, who gave me a fraudulent copy of a share register, right? He signed it saying this was an accurate copy of a share register of a company, and it was fraudulent. And I proved it was fraudulent because I actually inspected the actual register. So I got 2 copies from, you know, one of the actual register, one of what he claimed was the actual register, both sort of notarized by the guy, signature, corporate stamp saying, you know, this is a true and accurate copy. One of them is fraudulent. This guy wasn't even, not only was he not criminally charged, was he not shunned by society, was he not only, you know, he wasn't disciplined professionally, you know, no mild tap on the wrist. He wasn't even kicked off from being a council member of the Cayman Islands Law Society. And the guy gave me a fraudulent share register to conceal an entry in the name of Rani Jarkas of Cedrus Investments, who is banned from the securities industry for life in the United States for, among other things, elder abuse. He owes millions of dollars in the United States in judgments and awards in favor of clients, employees, the federal and state tax authorities. And he just closed down his shop in California, left the liabilities. Michael Alberger created these structures in the Cayman Islands and provided me with a fraudulent share register, and everybody's happy with it. You know, everybody's going out for drinks. The chairman of the Cayman Islands Stock Exchange is the managing partner of is the senior partner of the law firm that Michael Alberger is the senior partner of. Tony Travis, whenever anyone criticizes offshore, or particularly the Cayman Islands, you know, this guy writes to the Financial Times. He gives TV interviews, radio interviews. Oh, this is this is horrendous. It's a miscategorization. Cayman's the best. Blah 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 blah. His law firm gave me a fraudulent copy. You know, I mean, he's the chairman of the stock exchange. I mean, it's disgraceful, but that's life. You know.
Hi. I'm Charlotte Caulfield. I'm actually one of the liquidators of Fairfield Century, so I enjoyed your talk about that earlier. Just to add to one of the red flags to look for, the Madoff fraud was basically propagated on the split strike conversion strategy, which was this mystical technique that Madoff had for investment. Nobody could explain it, nobody understood it, everybody just drank the Kool-Aid and went with it. And if people would actually try to recreate the investment strategy, they would have easily discovered that it was just a fraud. So if you don't understand it, if you can't make the numbers work yourself, there's something wrong. Stay clear.
People want to believe there's a get-rich-quick, even intelligent people. You know, another red flag, very subtle one about Madoff, is the name of his company, Bernard L. Madoff Investment Securities. Alan Stanford, Stanford International Bank. Very subtle red flag, but do not put your money, in the terms of investment management, where they are soliciting money from you, do not put your money with any company that's named after a person, because it's a sign of an ego. People with egos, if they're losing money, they'll typically cover it up. It's human nature. This is a very subtle aspect of due diligence. But, you know, Alan Stanford, Bernard Madoff. I exposed a fraud committed by Tangerine Asset Management. The acronym of that is TIM. The owner is Tim Schools. It's collapsed now. This is the guy who struck off as an attorney, former policeman. One of the law firms that was funneling money out of this investment fraud was called ATM Solicitors. And he named it ATM because he considered this vehicle that he was stripping all of the money out of, millions of dollars, as his own cash machine. So, you know, look out for names. I mean, you know, there are red flags galore, but we don't necessarily, some of them are staring us in the face. You know, you got to sort of learn to recognize them.
I would just like to reinforce David's point on the ego issue and how vitally important that is. There is a long-term and rather major European Commission mission in Eastern Europe, which is now wholly discredited. A lot of money been spent, ineffective, and serious governance issues. And the red flag for that, which had been around for many years, is that the headquarters building was plastered with photographs of the head of mission. Outrageously so. It seemed like a personal vanity statement. That's what it was. Disaster followed.
Okay. Oh, one more. Yep.
Mariano Rambal. In 2008 and 2009, 1,700 hedge funds that went bust. One thing that was common previous to that was that the statutory documentation was very loose. The objectives of the hedge funds were very broad, and the evaluation methodology was very special. Everybody could choose how to value their own assets. I think that after the crisis and after all what happens, that have changed, and it is more specific today, these 2 points. But I also consider that a very important red flag to look into the statutory documents of the funds before investing, because that's the bylaw of the funds.
Yeah. But you know, the most important thing in investing is that nobody, no matter how bright, how qualified, knows whether your investment will go up, down, or stay the same. Never forget that. Not a single person. Long-term capital management, which collapsed in the Cayman Islands and sort of jeopardized the global economy, I don't know, a couple of decades ago, whenever it was. I think there were 2 Nobel winners that came up with their investment model, right? So super bright, accomplished people. And this thing spectacularly collapsed, had massive billions of losses. Not a single person in this world knows. If they're soliciting you for money, they do not know if it's going to go up, down, or stay the same. What they do know is that they will get their fees and commissions. So thanks very much.